Hello, welcome back to the You Should Crypto channel, the channel where you learn about crypto to make better crypto investments. Today we are going to answer the question, are Bitcoin treasury companies better investments than Bitcoin? So first of all, what are Bitcoin treasury companies? Well, there are companies whose primary activity is to accumulate Bitcoin. So for example, Tesla holds Bitcoin, but it is not a Bitcoin treasury company because its goal is not to accumulate Bitcoin. On the other hand, Strategy is a company whose goal is to accumulate Bitcoin, so it is a Bitcoin treasury company. But with that type of company trying to buy every Bitcoin available, one question arises: are treasury companies a ticking time bomb? You see, Bitcoin treasury companies apply a heavy buy pressure on Bitcoin's price, which you can see on the chart. Each orange dot is a moment where the treasury company bought Bitcoin. So by continuing to do that over time, they really make the Bitcoin price explode. But now let's take the example of Strategy, for example. They hold 640,000 Bitcoin, which is 3% of the total supply. If one day they happen to sell all their Bitcoin at once, the market could not absorb such pressure. There would be panic in the space, and the price would be likely to drop by more than 50% in the short term. This is true in theory, but there is a very low chance that happens, because if they sell all their Bitcoin at once, they would lose money. Now, are Bitcoin treasury companies an opportunity to take or not? And I am going to share with you my experience. So I did buy some shares of a treasury company. That company is Strategy, and the ticker of the stock is MSTR. Now, when I first bought it, it was going fine, but recently it is giving disappointing performance. But this doesn't mean the future cannot be bright. I am still positive on that position. It just hasn't lived to my expectation, but it might be different for you. After this video, you will know if Bitcoin treasury companies are for you or if they're not. But as perhaps the most notable investor in the world said, never invest in a business you cannot understand. So we are going to try to understand Bitcoin treasury companies. So how do Bitcoin treasury companies work? Well, primarily you have to know that the goal of those companies is to outperform Bitcoin, and they do so by increasing their Bitcoin per share and by growing their premium. But to make things clear, I'm going to explain what those things are. So the price of the stock is divided in two parts. Let's say that the price of the stock is $500. In those $500, the price is divided in the Bitcoin per share, which is the net asset value, and the premium, which is the perceived additional upside. So essentially, the orange part is what the company is really worth. This is the Bitcoin they hold. And the green part is the part that they pay in addition to the net asset value because they desire that stock. So essentially, when you buy that stock, the orange part is your exposure to Bitcoin and the green part is your exposure to the company. But what is Bitcoin per share? Well, it is fairly simple. If the company holds 15,000 Bitcoin and the company has 5,000 shares, well, you divide the number of Bitcoin by the number of shares and you get the number of Bitcoin per share. Here, it would be 3 Bitcoin per share. And the more Bitcoin per share the company has, the more the stock of the company is sensitive to the Bitcoin price action. So it creates an effect of leverage. You can see on the chart, in blue you have the price action of Bitcoin, and in orange the price action of the Bitcoin treasury company. They both follow the same movements, but the Bitcoin treasury company has more violent movements. But now, what is the premium? Well, the premium is what investors pay on top of what the company really is worth. But why would investors pay more than they should? Well, the market decides it, and to get hold of that stock, people are willing to pay more than it is worth to hold it. So the premium is dependent on the perceived upside. Because people want to catch that upside, they are willing to pay more. Now, as a rule of thumb, when the market is booming and the prices are going up, the premium increases. But when markets give low return, the premium decreases, and that is because the stock is less desirable. Alright, so we saw that Bitcoin treasury companies try to outperform Bitcoin by increasing their Bitcoin per share. But how do they increase the amount of Bitcoin they have per share? And there are two methods. The first one is to buy more Bitcoin, and the second one is to reduce the amount of shares that are in circulation. But because reducing the amount of shares in circulation would mean that the company would have to buy them back, this is not a solution Bitcoin treasury companies adopt, because they would rather allocate their capital to buy more Bitcoin. Alright, so we saw that the main operation of those companies is to buy Bitcoin. But with what money are they buying those Bitcoins? In other words, where does the money come from? Well, it comes from operating cash flow, asset sales, debt financing, and equity financing. First off, let's start with the simple ones. Operating cash flow. If the company has another business that drives profits, they can convert those profits into Bitcoin. And that is mainly for companies who are shifting from their core business to a Bitcoin treasury company strategy. Second one, we have asset sales. And this one is also fairly simple. Basically, they are gonna look at the assets they have on their balance sheet and convert them into Bitcoin. That can be cash or real estate or anything they can find. Moving on to what companies actually do. Debt financing. They raise capital through debt and they convert the cash they got from the operation into Bitcoin. And there are a lot of ways to raise capital through debt, but I am going to show you the 3 main ways Bitcoin treasury companies use. The first one is convertible notes. Basically, convertible notes are loans that can turn into company shares later. Then we have corporate bonds. Corporate bonds are loans investors give to the company in exchange for regular interest payment and the promise to have their capital back. And then we have Bitcoin-backed loans, which is essentially using the Bitcoin you already have as collateral to get a loan. But that has a downside. You have to repay capital, and if you allocated that capital into buying Bitcoin, well, you cannot honor your debt. And that is why companies prefer to do equity financing, which is raising capital through equity. And so they convert the cash they got from equity into Bitcoin. And there are also a lot of ways to raise capital with equity, but I am going to show you the 3 main ways Bitcoin treasury companies use. First one is at-the-market programs, or ATM, which is basically slowly issuing shares into the market to get the cash from the sales of those shares. This second way is secondary offerings, and secondary offerings are the opposite of ATM programs. ATM programs issue shares slowly, but secondary offerings issue a big pile of share and sell it, oftentimes at a discount. This has the benefit to generate a lot of money quickly, but the downside is the price of the stock is likely to go down, and that is because you dilute the current shareholders. But I will explain that more in detail in a few minutes. And the third way is preferred stock issuance, and this allows Bitcoin treasury companies to create financial products that will generate revenue to finance their buys. And so after all that is done, it creates an infinite cycle. First they finance their operations, then they accumulate Bitcoin, then their stock price fluctuates because of Bitcoin's price action, the amount of Bitcoin per share the company has, and the premium the stock has. Then the company will make sure the positive public sentiment is strong, which will give them the ability to finance more easily because investors trust them and they see a big potential upside, and the cycle continues. But the cycle can only work with one condition. The price of Bitcoin has to go up. What I just explained is a virtuous spiral. It only goes up. But if the price of Bitcoin starts to go down, the stock price of the company will go down as well, which will weaken the public sentiment and they will have a harder time financing their operations. And because they won't have the money to buy more Bitcoin, their strategy will be freezed and it only goes down from now. Alright, so now you understand how Bitcoin treasury companies work. But concretely, how do you take advantage of those opportunities? On my channel, you learn to increase your crypto gains. I do weekly videos to try to help you make better investments thanks to my content. So I think subscribing to the channel is a good idea. What you will learn will make the future of your portfolio very bright. Alright, so now we are going to answer the main question of this video. Should you buy Bitcoin or Bitcoin treasury companies? And I created a simple comparison tab because there is not a fixed answer. It all depends on who you are and your preferences. First of all, compared to Bitcoin treasury companies, Bitcoin is low risk. You're less likely to lose the entirety of your capital by buying Bitcoin than by buying Bitcoin treasury companies. Second of all, you have to consider how long you want to hold to the asset. If you invest in Bitcoin, you have to be long term. But if you invest in Bitcoin treasury companies, you have to be mid to long term. Bitcoin will rise slowly thanks to gradual adoption, but Bitcoin treasury companies can be held mid-term thanks to their leverage. But you can also hold on Bitcoin treasury companies for the long term if the fundamentals are right. Next, with Bitcoin you control the asset. It is yours and no one can take it from you. But with companies you have to trust the company. So if you tend to trust yourself but not others, you might be better off with Bitcoin. But lastly, taxes with Bitcoin can be more complex. While this is not a problem if you decide to hold it for life, it will be if you decide to sell it. Depending on your jurisdiction, it might be very complex. In some countries, it's fairly simple. But with Bitcoin treasury companies, because they're companies, well, you have simple capital gain tax, which might be easier for some people. So basically, Bitcoin treasury companies are a bet where you take more risk, but you also take the option to have more upside. Obviously, you can also take the option of buying both Bitcoin and Bitcoin treasury companies. It might be smart to mitigate risk in your portfolio. Now, if you're interested or took the option of having a higher potential upside, I am now going to show you what you should look for in a Bitcoin treasury companies in order to make the best choice possible. The first thing you should really have in mind while betting in a Bitcoin treasury company is that you're betting on Bitcoin, but not only. You're also betting on the financing discipline of the company, the management judgment, and the continued belief of the market in the promise of the company. And if you're not careful enough, there can be traps. but they are avoidable. So now are the key factors to minimize your risk. First of all, you should look at the leverage risk of the Bitcoin treasury company. So in other words, how they finance their operations. If they use debt, the debt has to be sustainable. So you have to look into the type of debt they have and the plan they have to honor their debt. If you have no clue how they will do that, it might be a red flag. Now secondly, and this is one of the major factors, is the dilution risk. If the company does equity financing, you have to make sure that the company does not issue too many shares. If they do issue shares, it has to be above net asset value. So you have to look into the type of shares they issue to make sure you're not diluted, and you also have to make sure that the stock is valued at above net asset value. But because that might be a bit complex, I'm going to give you an example. So for example, let's imagine a company. It has 100 Bitcoin. It has 100 shares. It has a ratio of 1 Bitcoin per share. Let's imagine that at this moment, the price of Bitcoin is $100,000 and their stock has a premium of 30%. So the price of the stock is 13% higher than its real value. This would give us a share price of $130,000. Alright, so knowing that, let's imagine the company does equity financing. So they issue 10 shares in the market to raise money to buy Bitcoin. So because the price of one share is $130,000, if they issue 10 shares, they will raise $1.3 million. But what would the effect of that be? Well, there would now be 110 shares in circulation. But on the other side, with the $1.3 million they raised, they could buy 13 Bitcoin, and so they would now have 113 Bitcoin. And this is where the magic happens. If you do the calculation, you realize that now, instead of having 1 Bitcoin per share, they have 1.02 Bitcoin per share. So thanks to the premium of 30%, they could increase the shareholder value. And this is why you have to make sure that when the company raises money through equity, the stock price has to trade above net asset value. But let me give you an example of what happens when the company does it without a premium. So for this example, we have exactly the same numbers. The only difference is that instead of having a premium of 13%, we have a discount of 10%. A discount is when investors do not have a strong belief in the company. So the stock is not desirable and it trades under what the company really is worth. So with 1 Bitcoin per share and a Bitcoin price of $100,000, if we apply a 10% discount, that gives us a share price of $90,000. So doing the same process, the company issues 10 shares to raise money, but because the price of the share is only $90,000, they would only raise $900,000, as opposed to the $1.3 million they had with the premium. So like we had on the last example, we would go from 100 shares to 110 shares. But, and this is where the problem arises, in the last example, we had 113 Bitcoin. But here we only have 109, because with a Bitcoin price of $100,000, if you have $900,000, you can only buy 9. And so if you do the math, you realize that you have destroyed shareholder value, because you went from 1 Bitcoin per share to 0.99 Bitcoin per share. And the more the company reduces its Bitcoin per share, the less money you will make with that stock. Now, next we have the premium compression. And if less and less people see a big upside potential for the stock, the premium will compress, reducing the stock price. So you have to make sure that the company delivers on its promises. And the main promises a Bitcoin treasury company can have is increasing the amount of Bitcoin per share and outperforming Bitcoin. One thing you have to know is that you can have an increasing net asset value, but a decreasing premium. So let's look at this example. Let's imagine you have a stock price of $500. The orange part represents the net asset value, so the Bitcoin the company holds, and the green part is the premium, where investors value the company at. You can see on the second bar that even though the net asset value, so the orange part, grew, the stock price is still the same, and that is because the net asset value did go up, but the premium shrunk. So you have to make sure the premium is strong, not to offset the upside of the Bitcoin accumulation strategy. Now, one other important thing you have to look for, and it is perhaps a difficult thing to check, is the alignment of management. So the real objectives of management. The main objective of management should be to increase the Bitcoin amount per share, but they might be tempted to increase the total amount of Bitcoin the company holds, regardless of the amount of Bitcoin per share, which would benefit the company but not the shareholders. So the main goal should be to improve the Bitcoin per share ratio. And lastly, we have something way funnier, and it is to know who the face of the company is. And I say something way funnier because I love the guy I am going to talk about. So the face of the company is basically advertising, but you have to make sure he or she has integrity, because the actions of the face of the company will directly affect the premium. If the face of the company is known for holding Bitcoin for life, and then we learn that he sold Bitcoin, well, the market is not going to take it well, and the premium of the stock might shrink because people lose trust. So the face of the company should be very vocal, and its objectives should be aligned with investors' interest. And now I am going to show you an example of a Bitcoin treasury company that has a good potential upside. And obviously, I am going to talk about the industry leader, Strategy, with its stock MSTR. And yes, this is the stock I presented you in the start of this video. This is the bet I made. So at the very start, Strategy was financing their operation with debt, but they are moving on from that because they clearly understand that this is not efficient, and so they're moving on to equity financing, which is way healthier because they are not at risk of having to sell their Bitcoin. Overall, over time, the Bitcoin per share ratio is growing, so this is a good sign. Overall, the premium is pretty stable. It goes through phases of ups and downs, but it is good enough for the company to be able to raise capital through equity without reducing shareholder value. And now we arrive to the man that gave me the conviction in Bitcoin I have now, Michael Saylor. So he's the face of the company, and he is also the face of the industry. This is as Bitcoin maxi as you can get. He is the chairman of the company, the Strategy, and he does a very good job at increasing Bitcoin adoption through education and its company's operations. The goal of my channel is to teach you about crypto so you can increase your crypto gains. So if you're on the same mission I'm on, subscribe to the channel. If you're interested in increasing your risk to get even more upside, go watch my last video about meme coins. In it, you will learn how to get the upsides, but most importantly, you will learn how to reduce the risk as much as possible. I will see you there.